You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If I sound a wee bit different this week, it's because I'm coming to you not from our studio in Chicago, but actually from sunny and scenic Florida, outside of the snow belt there that is bombing the East Coast. Yes, very nice and warm and sunny here for the Cboe Risk Management Conference. You guys know we like to attend this event every year and check out the latest and greatest in terms of volatility research and all that other fun stuff. So we're going to get to that. It's our annual RMC rundown show coming up. And you guys know, of course, how to get the show. You can tune in on all the major platforms, including our site, which we're making some improvements to. So you might see some changes on that site coming up in the next week or two. So keep an eye out for that. Should be kind of fun. Of course, you can always join us live every Monday and Thursday. Actually, no, every Friday. That's a different show. Every Friday, noon Central, 1 p.m. Eastern, via the old Mixler, MIXLR. In fact, we're so dedicated to keeping that live chat going for you hardcores. I know a lot of you were floating around at the conference here this week and came up to me about that subject. So we want to make sure we got a live chat, a live stream going for you. So hardcore fact that Russell and I are down here at the same conference, and we're not even sitting together. We're about 100 yards apart, so we could both participate in the live stream simultaneously. That's how dedicated we are to you folks being able to live stream the show, listeners. And so I mentioned him. We haven't had him on in quite some time. It's kind of fun to welcome him back on. Mr. Russell Rhodes, the man about town over there at the Cboe and the self-proclaimed busiest man at this risk management conference. Mr. Rhodes, welcome back to Volatility Views, sir. It has been too long.
Oh, you self-proclaimed. Yeah, you know I'm running around with my head cut off over here. It's great, but it's awful as well. I need to sleep for like a couple of days after RMCs. We interviewed for Cboe TV. I think we did 15 interviews this time around. I've written blogs that are going to be going up over the course of the weekend on all but one of the presentations. Matt Moran took care of that one. And you know, this was a fun one without jumping too much into it. You know, the last couple of years, it's been how many different ways can you talk about short and volatility?
Yes.
And
yes.
with what happened about a month ago, it was a very different conversation.
Yes, it was, which was kind of refreshing. I'm with you on that. And as someone who does a lot of interviews himself, I can feel you on the 15 interviews. That's no mean feat, sir. I did not do quite as many this week, so that's hats off to you. We're going to get to all of that in a second and more. First, let me welcome on our other cohorts we couldn't do without him, so I wanted to make sure we beamed him in as well. Another reason why we got the live stream going. The greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show, sir.
Welcome back for me is right. It's good to be here. Quite the day here today. I'm a little flabbergasted at my screens. Just the amount of vol red that I'm seeing. VIX Futures are, I mean, the beta of the March future, which still has 2 weeks to go to the cash index, is I'm not seeing anything like this in a long time.
I think your cohort, the Rock Lobster, called it. They called them melty yesterday on the show. I think they're beyond melty.
This is different. This is totally different.
They're into like just a pure raging torrent now. Forget the melt.
They have taken a blowtorch to volatility and they're hammering it. I've not. This is really odd to see the way it's shaping. The amount of there must have been a ton of paper that was levering around that was levered up in VIX Futures.
Yeah, it's funny. I came down to this conference earlier this week, and I put on some bids at the beginning of the week. Didn't have time to really babysit them, and doesn't seem like those are going to come back anytime soon. Nothing's going back down to those levels. So it looks like we missed it. We missed it with the big deluge that is coming up at the end of the week. What you didn't miss, listeners, though, is it's time for our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
You guys should see me down here, listeners, rocking out with my headset on while I'm doing the show. People must think I'm crazy at the conference, but they probably do that anyway. Of course, welcome to the Volatility Review. This is indeed the portion of the show where we break down, usually is where we start off breaking down the week that is right now and was from a volatility perspective. We'll get to all that in a second. The deluge that is the volatility out there. If you've been watching it, you've been seeing what's going on, and it is quite beyond melty at this point, as we said earlier. But let's kick things off as we are wont to do. We are down here in Florida. It's that time of year again. A lot of things kicking off. Mr. Rhodes, you kind of nailed the one main takeaway I had coming out of that. I was kind of interested myself to see, is this going to be yet another year of quote-unquote harvesting the risk premium? And I was excited to see. I didn't really see any of those. Of course, I missed it. I saw someone put out a tweet. I think it was actually Keith Black, who does the studies with you, quoting showing a chart of the skew risk premium in put writing. So someone did still mention it down here at the conference this week, but certainly it wasn't every third presentation like it has been in years past. Would you concur, sir?
And something else that was kind of interesting is you didn't. We'll talk about what we didn't hear. And one of the things that we didn't hear was I did not hear anything about tail risk. And I was talking to a couple of other people, doing the interviews, a couple of the panelists from the last presentation, and they thought it was interesting that we still, in all that volatility harvesting, we'd have a talk. We would have a couple of people get up and talk about, cheap ways to guard against tail risk. And you would think if there really is some elevated risk going on in the market that we would have heard some of that. And I never got to play the tail risk drinking game while I was here because nobody brought it up.
So let's talk about what drinking games you did play, sir. Obviously, you sat in most of the sessions. I got to flit in and out here and there, so I have my thoughts. We'll get to those in a minute. But first, I want to hear you have you hit all of them. You talked to everybody. What were the big ones that kind of resonate with you? What was kind of a good take? Give our listeners a nice synopsis for who couldn't come down to Florida this week.
Oh my goodness gracious! You hate to have some that are more favorite than others. Bill Speth and Mandy Zhu on the first day, they talked about how you go about interpreting volatility-related indicators, and one of the things, and then different courses of action. And one of the things that they both said was VIX is not a fear index. It's not a measure of fear. And they actually showed some examples. Both of them showed examples of how call buying had pushed VIX higher in the past couple of months leading up to what happened in early February. They also, they said, and this is something that we have preached on this show a million times. is that you don't look at VIX by itself. You look at skew, you look at VIX, which I think is Mark Sebastian's favorite indicator. They didn't really talk too much about versus the index, but they did talk about the S&P a little bit as well, and going farther out, looking what people are thinking about 3, 6, 9 months down the road, as opposed to just 1 month out. So they brought up different time frames. Mandy gave 3 trading examples. One of them was if you're bullish on the S&P 500, selling out of the money put, buy a call spread. If you're in, I think she used either September or May options on that one. She didn't have an opinion. She was just saying, if you've got an opinion, here's a thought. On the other side, she basically just said, if you're bearish, recommended a couple of different put spreads. And then one that I jumped through those, because the one that I think we would care the most about was she talked about if you're thinking that we're going to have another shoe to drop, that there are really more potential downside catalysts for the stock market between now or between March expiration and April expiration than Monday or Wednesday when she was talking, and March expiration. And she noted that you could sell like an out of the money 25 delta March call, VIX call, and the implied vol was about 155, 160%. And the implied vol on a similar 25 delta April call was around 120. So it was a way that you could go about, taking in some premium on the March, buying the April. Now we all know that time spreads, and it was actually a diagonal spread with VIX options, has a lot different risk than spreads on any other market, because the underlyings may move independently. But if we were to get the volatility event before March expiration, you would get some benefit from the April options. You'd probably see a rise in implied volatility for the April options as well, as that gets closer and closer to being the front month. So that was kind of an interesting if you're worried about volatility trade. As far as Monday or the second day, Thursday goes, we had Tilly come up and give his keynote speech. There were no new product announcements, which is unusual for that address. He really did talk about what happened in early February, and that video is going to be on our website. I think by the end of the day today, and the text of his speech is actually up on our website as well.
That's good, because people were asking us about if we're going to broadcast that speech, and I said no, we don't. We have to wait for it to be available on the RMC site. So it sounds like you guys are fast tracking that a little bit.
We're fast tracking that. I actually did a mid-conference webcast yesterday afternoon that we got a big response from. That's something we haven't done before. We're trying to get the information from this conference out there a little bit more, really in response to what happened a little bit more than a month ago. We had Cameron and Tyler Winklevoss talking about digital assets and the future of finance. One of the things that I found interesting was they had said before that they were, at some point going to expand beyond Ethereum and Bitcoin for the Gemini Trust. They got a question from the Bloomberg reporter, and they even gave some specifics. They said that the kind of assets they're looking at are the ones that have their technology based in the same thing, in the same, they called it tree as the Satoshi Nakamoto family of cryptocurrencies. That's how they referred to it. And then they actually mentioned Bitcoin Cash and Litecoin as things that they were looking at. Litecoin has been a dog for about 6 months. But talking to the people that know more about the technology, I had heard that they had a little bit better technology, or people felt like they had a little bit of superior technology.
I've heard that as well, Russell. That
I mean, and don't ask me why.
Well, one of the interesting things I do know is that Litecoin is, because of the speed, people use Litecoin to actually arbitrage between exchanges in Bitcoin. So they actually use Litecoin to transfer dollars between their exchanges. and then they'll use that as a way of actually getting the money around in the crypto space. So that's one of the reasons why Litecoin is so popular, is that it speeds the speed with which it settles and clears. There you have
it's funny.
it, folks.
So,
There you go.
No, I know it's
Crypto week.
Crypto with Mark Sebastian.
Russell, you hit on one of the presentations that kind of resonated to me too. That same woman, I forgot her name. You just mentioned it, but it sounded to me like she was almost doing an episode of Volatility Views, because we talk about that stuff all the time. Looking at VIX in context with so many other indicators, like the VVIX, which she mentioned, like the VIX Futures term structure, which she mentioned, like the skew. That's things we hit on so many times on that show. I found it kind of. In fact, I think I even retweeted some of her comments from that panel, because that one just it was refreshing for me to hear it down here at this show after we've kind of beat that drum for so long. VIX Cash is nice, VIX Cash is fun, but you got to look beyond it. And I was glad to hear someone else echoing our statements there at the panel. Here, go ahead, sir. I did not mean to derail your summary.
Oh, no. That's all right. Give me a little bit of a break here. So we had Louis Vincent Gave speak. He talked about how he feels like and he's an economist that's based out of Hong Kong. He focuses on China, and he highlighted something that I hadn't really heard before about China, that they that the most recent Congress, they went through a structural shift on what they sent all the officials back to their various cities about. And what they basically said was that the shift is not give us the most growth you can. Basically it's, I want you to improve housing. I want you to improve the ecology, or we want to be a little bit more green in what you do there. And we'd like to see an increase in the health of your citizens. So they're being sent back with marching orders that, if they achieve their goals, they get to move home to Beijing. Otherwise, they're left out in the middle of nowhere forever. So they're all going to follow what they've been told to do. That this is going to be a lower growth China, and you may actually see them miss some growth estimates if they report the honest numbers based on.
If they report the honest numbers.
That's a big if. That's what I was going to say. That's a big if.
This is something that, and keep in mind that the numbers out of China tend to come out on Saturdays. So, I think if I were, if I worked at a sell side firm or I worked at a buy side firm and I was talking to my analysts and traders and portfolio managers, I would be cracking into the economic calendar and seeing when are the growth, what Saturdays are we going to get those growth numbers, and make sure people are taking a little bit less risk over the weekend or hedging. And shameless plug, we've got Monday options at Cboe. Might be perfect for that. Monday SVX options.
Monday options. Oh, can I just say that why are Monday options always so wrong? They are, it seems like they cannot get the weekend right on those options. They're statistically so cheap relative to, I think, I don't know if statistically is the right word, but I have found that if you use those as a long peg against a long option peg against anything you want to do, it is so much easier to make money trading S&P 500. I don't know if they're pre-blasting things, but take a look at vols right now. The Monday vol in March, now obviously we're going into weekend, Monday vol right now, according to Live Vol, for Monday is 9.67. For Wednesday, it's 11.73. I mean, does a weekend really mean that you should be 2 full vol points lower? My answer might be no. And in fact, it is no. I think that there's, to Russell's point, you've got the best of both things, right? China could miss some stuff on Saturdays, and Monday options are too cheap. Just a thought.
It's at least 2 points for a weekend, Mark. I don't know what you're saying. It's crazy talk.
It'll be interesting to see if we get a bad China number at some point, if they start repricing risk on Friday afternoons. That's all. I mean, we've had that issue before. I think we had that issue for a little while after what happened in August of 2015, where people were a little bit more nervous going into the weekend than they had been. And it's really funny. In one of the side conversations I had here, we were talking about the non-standard expirations, and more than once I heard people say they felt like there was the best opportunity to trade the Mondays. That's where they're, which goes along with what you just said, that they seem to be mispriced relative to people's opinions more than the other the Wednesday, Friday expiration.
Yeah, I exactly.
Russell, that presentation kind of caught my eye as well, because we're used to coming down here and seeing, presentations on skew and hedging and different strategies and things like that. Not so much on macro trends coming out of Asia. So that one kind of stuck off me as it's being something completely different. So that was kind of interesting. A little bit of a curveball at RMC, which is not unappreciated at the end of the day. So, and
let's see, just I really could spend 10 minutes on each of these, but just a couple of more. Stacey Gilbert, who I'm like her number one fan.
Oh, I like her. Yeah.
She's the best. Yeah, she and I did a great interview just a few minutes ago. She actually has become very interested in behavioral finance, which goes along with my dissertation topic. And so she actually did a talk, and she was supposed to go 30 minutes and ended up going about 50 minutes with commentary and whatnot on, just the how, regardless of what we know as far as odds go, we tend to shy away from trading the odds like we should all the time. And that's actually what creates opportunities in the markets. Just not making the, not being willing to take on even taking a risk that you might have a tail outcome. And one of her best lines was, she goes, "Yeah, I don't really want to go home and to my husband and say, well, honey, I lost $1 million of our personal money today, but I had edge." I absolutely love that line. I could see Mark doing that with big blonde hair.
Oh yeah. She's actually in my office right now. I'll ask her. I can ask her what she thinks. So, Lauren, if I came home and said, "Hey, I lost $1 million of our own money, but it was on a really good trade that would work 9 times out of 10," how would you feel? Oh, jeez. She's bringing up the time where believe it or not, she's bringing up the time where she basically said, "Didn't that happen once?" And I said, "It kind of did."
Oh.
So, yeah. Well, there you have it, folks. Even the best of us lose.
Russell, even one of the things that caught my eye since you're talking about strategies, which was kind of interesting, and I was the guy from Bank of America Merrill Lynch. I forgot it was that dual. It was that dual presentation with the two men. I forgot their. I'll have to have you fill in their names because you have all their names there. They're talking different strategies, and we see a lot about VIX calls versus SPX puts, and that was certainly in his presentation. Again, he was talking about writing SPX puts this time, hedging that with long VIX calls, playing on that way, which we've kind of seen different spins on that. What kind of caught my eye and kind of resonated a little bit, I think, would interest our audience as well. He had another strategy that he liked. He calls it as kind of his low carry kind of fragility trade, which is pretty much straight up long the front month calls in VIX, and then he put in over hedging the 2-month futures. And a lot of people might blanch at that and say, "Oh, wait a minute, over hedging the futures, that's crazy talk." But he was careful to dial it back and say, not 1-to-1, not going crazy, just I think slightly more than delta neutral is what he was recommending. So you get that nice little bit of carry over the near term. But if it does blow up like in February, those VIX calls kick it into another gear, and that kind of makes up for the over hedging of the delta. So that was kind of an interesting approach. I've seen different call calendars used to that and discussed here at the conference before to a similar effect, but not the calls with the futures in that specific ratio before, which I thought was kind of interesting. Did you pick up on that one?
Yeah. Now, every time we come down here, or we go to, I go to any of these, I come away with like 2 or 3 unique uses that I hadn't really thought of or heard people speak on before. And that by far was one of the best ones that I heard was, just selling the puts and buying the VIX calls And they actually, and he actually showed a ratio of where it's when it's more expensive and cheaper, and that actually turns out to be somewhat of a signal for him. You know, it was just there are lots of things that I go away from this conference that I want to work on, and that is by far at the top of the get to list before I have to go to Ireland in September. And it was who was that? It was Nitin Saxena from Bay.
There you go. I'm glad you said it and not me.
And Cam Kazamai from Lafayette. So
yes.
He's out of, I believe, Montreal, and that was one of the better. They were all great, but that was one of the more thought-provoking. I'll put it that way.
Yeah, Mark, that might be a good project for your new vol fund, is figuring out the exact hedge ratio for the futures versus the VIX calls to dial in that sweet spot. Because, you know, if you go too crazy, obviously that's not good. If you go not enough.
For like how much to hedge? Yeah, we've got that's actually we've already done that and have kind of figured out where we want to be hedged and at what level. And really, I'm sure Russell is unsurprised by that, but believe it or not, it's counterintuitive. The higher the VIX goes, the more you want that hedge ratio, and the lower when it's lower, you actually want a lower hedge ratio. And it's kind of phenomenal. You know, we found that at its peak, if you're running what amounts to a VXX portfolio, you really never need to hedge much over 35% of your portfolio. When we into the Feb event that we had with XIV and SVXY, that 30% actually produced a return that exceeded what you ate on the S&P 500. So we've spent a lot of time, and actually, speaking of which, we did our first trades this week. So we're kind of excited about that. And you know, we had some good timing in that we were supposed to be trading last week, and we happened to to be kind of locked up, so we missed a 100-point down move. Not bad when you're a put selling fund, right?
What were the kickoff trades to the new formerly known as Prime Meridian Fund, now unnamed?
The Carmen Line Broadcap Edge Fund. We are short at the 27 quarter put and the 27.10 put, and long as a part of clearing up margin, just the 1,700 puts for a net price of 7.5 cents in March.
Well, there you go. So welcome to the new fund in the formerly known as the Prime Meridian family.
I know. Well, I'm gonna with all the trading I'm doing in that fund, Russell's kids can safely go to college.
There we go. I like it,
Ooh, I love
Mr.
it.
They can spend 20 years to get a doctoral thesis like he is, which is
exactly. That'll be beautiful.
Mr. Rhodes, any other takeaways that really kind of resonated with you?
Well, Ronnie Israeloff of AQR, he just got a paper published in the Journal of Derivatives, and he gave it was the first time he had spoken about the paper publicly. And basically what he showed was you've got certain funds that maybe you've got a 60-40 stock to bond fund. And if if we get to 70-30, they got to rebalance. Well, he actually has shown how you can use options, write options against your different positions, and you systematically are going to rebalance, but you also take in some income and maybe enhance your performance a little bit. And then it also, trading-wise, becomes a cheaper way to go about rebalancing. So that's something that I want to download the paper and dig into. I invited him to come to Chicago and present it to our business development group. So we'll see if he takes me up on that one. But that was the final the final presentation that I really paid a lot of attention to.
Yeah, you hit on a lot of the ones that kind of caught my eye as well. Like I mentioned, I didn't have a chance to sit in as many as you. Unfortunately, I was busy doing the show thing. But that said, a couple caught my eye, like the ones you mentioned. The ratios with the VIX futures were kind of interesting. Oh, I think Mr. Sebastian's is dying on us. And then you got to hit that mute button. So unleash a hurricane upon the world. And then Yeah, a lot of talk, obviously, about the impact of the unwinding of XIV and stuff. You guys pointed out some interesting data that you said your findings show that they accounted for about 5% net of VIX futures. I know there were some kind of wild estimates out there in the initial days after the 6 about SVXY and XIV and how much of that flow they actually accounted for. Also, some interesting data saying that 60% of VIX futures flow coming from your traditional, prop traders and customers versus some other people thinking maybe some other funds had accounted for some of that stuff out there. So those are my interesting kind of takeaways, in addition to the fact that not a lot of harvesting the risk premium this year, which I could use a break or two from that myself. I'm sure a lot of the attendees can as well. So there you go, Mark. You didn't have to come down. We covered the whole thing for you. Let's roll on now into our review of all things volatility for this week. And as Mark kind of spoiler alerted at the top of the show there, it's all coming in. It's coming in kind of across the board. So apparently, Trump's meeting with Rocket Man, non-farms where we get strong growth without inflation. Everything's good again. The tariff war. What trade war? It's all in the rearview mirror. The markets rally, ho mode. VIX Cash getting into around the 15 handle. Yeah, we saw non-farms increase by 313,000 in February. They were expecting 200,000, while also we saw wage growth muted, which was kind of a magical combo for the market, sending futures rally ho mode again. So crazy town. So Mr. Meatball, let's get back to what we were talking about before. What's catching your eye in this kind of, once again, the death knell of volatility? Are we all going to get back into the short vol trade now? Oh, Mr. Meatball, I think you muted yourself when you need to be unmuted now. It's kind of the reverse.
I was telling a guy in the office that this isn't even a Goldilocks number this morning. This is Goldilocks's super hot sister that has a PhD in physics.
Also eats porridge.
And eats quinoa instead of porridge. She's on a quinoa, she's having a quinoa avocado bowl. This Goldilocks.
Trendy.
Yes, exactly. Side of avocado toast. Yeah, I mean, they are. The thing that really blows me away is that we're seeing the VIX future in March keep almost a 1-to-1 pace with the VIX cash index. I've got the VIX at about 15.15 right now, down about $1.36. And the VIX futures are, let's see, I'm looking at VXX. Let me pull up VIX here. I mean, the VIX futures are 15.60. That's down $1.27. It's actually down more than the index. It is. I'm like flabbergasted. I've never seen anything like this. But I think it goes to tell you that there was a huge pent-up there was a massive long vol trade that is being unwound today, and unwound with some speed. Nobody wants to get stuck long these things nobody wants to get stuck long these things on the way down to maybe 14 or something like that. So there is a big unwind on healthy volume, but not crazy. It's not like the volume's been insane. It's March futures are right now down about 76,000, and April about 54. So we've done about 160,000 on the day. That's nice, but it's nothing insane. We've been having kind of a back and forth. And one thing I kind of want to ask about and think about is, now that SVXY has reduced its exposure and XIV has reduced its exposure, there are two thoughts that are out there. One, that it will kind of increase some contango. The spread between VIX and, the curve that had gotten really flat, right? 3 years ago, you would think that at 30 days to expiration, the VIX future would be maybe 2 points above VIX. And then last year it was 1.5 points. And then heading into January, it was 1 point. And, obviously we had a big vol event, but there's some arguments that those VIX futures and all the money piling into these short vol funds was deep dampening contango. And I'm thinking that what we could see in terms of short vol is a return of an actual contango trade. Because the last year, all really people are like, oh, I'm a contango trader. Really, all you're doing was blasting short VIX futures.
Yeah,
that's it. It was not. This is more a contango trade you're looking to pull 20, 30 cents over a month, not just sit there short, not in a day or two. So I'm interested in kind of how these short vol funds are going to affect curvature, and whether the lack of these short vol funds is one of the reasons why the spike up did not see a spike back down.
I think that would be a welcome development to a lot of people who have kind of ever since. I think someone even mentioned it at the conference here, one of the presenters, that the February 5th and 6th event really just left a mark on the VIX Futures term structure that had yet to be erased. Maybe we're seeing some of that finally being erased today.
What Mark was it? Was it Mark Longo or Mark Sebastian?
I think one of them is infinitely preferable to the one's like the sexy Goldilocks one, and one's like the old school Goldilocks. I'll let you choose. I'll let you kind of figure out which one that is. But that said, I think a lot of people would welcome that return to a nice, aggressive, steep contango. That would be great for, I think, a lot of vol traders out there would certainly welcome a regime like that. A nice, steep contango. Nice, makes that erosion trade that much better for a lot of people out there. I think that would be a welcome development for a lot of people. Mr. Rhodes, I know you've been busy kind of cataloging all things RMC this week, but outside of that, anything really catching your eye in this week's kind of topsy-turvy world of volatility?
Well, the whale. Let's talk about the whale.
Yeah, talk about the whale. Mark, you and I were talking last week, and you mentioned I asked you if you thought he had closed it out, because I still saw a lot of OI on the strike, and you said you thought he had closed it out, but it seemed like there was still a lot of size on that strike, which seemed kind of weird. I haven't had a chance to dig into it.
Out, for sure.
Yeah, he's out now.
Because no, he's not out now. He covered. Okay. Just talking about the 25 calls, because they got out of the short 12 puts and the long 15 calls, and we're talking about standard March expiration. When they traded out, they were short about 500,000 of the 25 calls, and they covered 250,000. Well, today about 125,000 were covered at 25 cents. Now,
nice trade.
We don't know for sure that there was that whale, because the open interest is around 484,000 contracts. But we know for sure that going into the day they still had the position on. But
I'm looking at the volume today.
About half of what they had.
Yeah, I'm looking at the volume today, and it was not done in a block. All the volume was not done in a block. It was done in small pieces. So if he got out, he's doing it
they
clips.
Did a 90.
Yeah.
They did a 90,000. They did 190s and then a bunch of small ones.
Yeah.
But they did do a 90,000.
Yeah.
And here's what and I'm going to be total company man here for a second. The bid ask was 20 by 25 for minutes leading up to this trade getting crossed. And they were able to buy 124,000 in a bunch of different pieces without moving the offer side.
That's impressive.
I think that is a huge, huge testament to what you can get done in that VIX Fed.
Yeah, especially with, it's printing over 1 million contracts a day these days. So, that's not a lot of products can say that. Let me ask you this, Mr. Meatball, because that was always my concern about his trade, is he had that kind of naked short leg on the upside. So you knew this guy wanted things to kick off, but not quite perhaps what we got in February. It might have been a little bit too much of a good thing for him. So he took off 1-to-1 initially a few weeks back, and I think he paid like $4 for that initial 25. So I'm sure to close them out, I think Mr. Rhodes will know when he closed them out 1-to-1 initially. He left the other half kind of naked open. I'm curious, what would the Rock Lobster as your risk manager say to that, Mr. Meatball, if you had to leave half of the trade still kind of open? You knew what he was up to, but still, that's an intense week or two waiting for that to come your way.
Yeah, well, yes, but we don't know exactly what his portfolio looked like.
That's true. That's true.
With some of these funds, they have sweet spots, but a lot of times they actually have tails built in into the structured products or the structured credit that they're carrying, where it's entirely possible that as those short 250,000 VIX calls were blowing up on him, he was making a killing on the credit side. We don't know how he's structured. So he could be crazy like a fox for all we know. Is that even the right word? Crazy like a fox.
It is
right.
crazy like a fox. Because we have said that many times on the show. Obviously, he has other axes to grind. We're only looking at the VIX options portion of it. But exclusively from that point of view, it did seem a little bit. He was playing with a little bit of fire. But you're right. Hopefully, he was sitting on a lot from the other side, and the 1-to-1 trade didn't work out too badly in his favor either. But it was kind of interesting, Mr. Rhodes. Are you saying he still has another $1.25 to go?
Probably. At minimum, they may still have it open. I mean, it could have been, somebody else that has a big position in it.
Could have been 50 cents.
Just the number. The numbers add up very nicely. It was not.
He's like,
50 cents. That.
I like that trade now, but it's too cheap for him.
Yeah.
It's half of what his level is. So yeah, that's been interesting. A lot of people have been asking us about that. Our friend the whale. Yes, he's apparently mostly out. And probably waiting for this. If this deluge of melting continues, he might want to get back in. We'll see. So keep an eye out for that one. Not do the whole thing again. Set it and forget it. Speaking of VIX options, it's been kind of an active week, as you might imagine. I'll have to have Mr. Rhodes look at the numbers for today. I don't have those in front of me. But for the rest of the week, we had about a little over a million, about 1.1 million yesterday. On Thursday, Wednesday, Tuesday, and Monday, a little bit lighter, about 700,000 on Monday and 400,000 each of the other 2 days. ADV right around, almost exactly around that 1 million threshold. The call to put, as we mentioned before, a lot of the upside got taken out in this big spike. Hasn't been repositioned. Also, we saw people spec into the downside as it has reverted here. So we've seen that call to put get a lot lower than it has been traditionally, right around 2 to 1, which is historically pretty low. Historically, you see usually around at least 3, maybe 3.5 to 1 out there in the VIX land. As the hot VIX strikes, as you might imagine, coming into this morning, we just mentioned it. What the number one was, you can probably guess. It's those March 25s. There were 490,000 open coming into this morning, so we shall see how today's activity affects that. But I think all of us are pretty much in agreement that it probably will be less coming into. There's a chance, like Mr. Russell said, someone is opening, but probably not. Probably, all things considered, it probably is winding those down. So that is still number one with a bullet out there. Followed number 2, the March 22s, 327,000. Our first put on the list, our old friend, the March 15s. That's his other strike. So maybe there are people flocking into those. Other people will be trading the 15s now as well, of course, but still, maybe it is. Maybe he is considering when to set it and forget it yet again. Number 4, the March 30s, the ever optimistic March 30s, 248,000. Number 5, second put on our list, the March 14s, 242,000. Number 6, the third and last put on our list, the March 12 puts, 242,000 contracts open there. Number 7, the April. First and only April on our list, the April 22s, 238,000. Number 8, the March 15s, with the winds kicking up here a little bit. I'll put that down for you. There we go, listeners. About 218,000. Number 9, the March 16s, 212, and round out our top 10 of the hot VIX strikes here coming into today. The March 17s, 208,000 contracts, total of about 12.6 million open, about 8.4 million on the calls, about 4.2 million on the puts. Mr. Meeple, anything else catching your eye? How's our perennial favorite, the July 1075 strangle? That one still brings a smile to my face whenever I think of it.
Yeah, that one's he's going to be pretty happy. I'll tell you, the amount of straddle sellers that we saw around 16 and 17, they're going to be buying that stuff back. That's part of the reason why we're seeing vol actually kind of hold up. Believe it or not, Mark, VVIX is up right now because there is a bid on puts. I'm watching right now, and my entire downside curve for the VIX index options is red. So I mean, when I say that, I mean it's red on the bid, which means my bids are actually through my theoreticals right now, which is it's telling me to sell, but I'm not going to do that because vol's going up on those, and so it's definitely an interesting day. The other thing I would note, look at SPX. How about this? This is what I mean by straddle prices are wrong. And that March level has been too cheap. So let's talk about the March. So we're trading the S&P right now is 2,077.70. So 2777.7. Well, how much do you? So that's up 39 points, 38.7 points. How much do you think the 2775 straddle cost me, Mark? Expiring March 19th, so that's 10 days from now.
You bought it today? You buying straddles in the
If
new?
I'm buying it, if I was going to buy it right now, how much do you think they're going to charge me for the 27.75 straddle, which is right at the money?
10 days?
For 10 days.
I'm gonna say 15. Nice round number.
15? You're kidding, right? No, we're up 40 today, Mark. What do you think?
I wanted to play with you a little bit, sir.
No kidding.
I'm gonna say probably a little bit higher. I'm gonna say about 27.75, probably 32 to 35.
No, it's $41. $41 for that straddle. That's a vol of 11.2, and like I said, we've moved $39 today. That straddle, if we go back to where we were yesterday, that straddle is going to be up $20. Mal,
as we say on our Twifo show, that will pay the rent because the rent is fairly cheap right now.
So I'm looking at that straddle. I already threw on this morning, just small, not in the fund, just in PA. I bought the 70 straddle, call it an hour ago, and that actually is up. A one lot SPX is up $200 already.
It's funny. We've been talking about this on the show for a while now. That it seems like in the last week or two, there's been this resurgence of straddle. How often do we talk of VIX or even now SPX straddles? And yet it seems like they are the rage all of a sudden.
This entire mess through February through January, I probably threw on. I want to say at least 10. I want to say closer to 15 short iron butterflies. So long straddle, short the wings. I did not lose on a single one of them. Not a single butterfly did I lose money on. Every single one, and with an average P&L of a couple of dollars on those, with a hold time. I mean, I just got done with my longest hold time, and it was 3 days.
And I speak in my language, so I always like the iron fly. I've never been a condor guy. What did Don used to say? Oh, Don, the iron condor is an iron fly for cowards. I've always liked that. This is long the straddle.
This was long the straddle, but skew was just moving around so quickly that you could do really well on the. What would happen was we'd have a down day, you put on the straddle, then we pop the next. If we kept going down, we'd have momentum down, and you went on your delta. But if we rallied, they'd kill the skew, and you'd win on your delta. Like today.
Life is yes, like today.
Today was nice.
Days like today, things have been coming in across the board. We mentioned that erosion kicking in. VXX obviously taking it on the chin today. It was in the low 40s coming in. It's off about two handles and change now coming into close to the end of the show here. If I can get my right around 39 or so, off 2.5 handles out there already today. Our old friend VXX. You already know the number one VXX options position, Mark. I want to ask you. It continues to grow apparently. The Jan 10 puts in VXX, Jan 2019 10 puts. More of those playing out there this week. 162,000 total. Followed by the Jan 2019. It's all Jan puts. Jan 15 puts and Jan 5 puts. Almost very similar OIs on those strikes. It kind of makes me wonder if there was indeed some sort of funky vertical going up out there. I'll have to dig it in. The rest of it is, it's pretty much now the top 10 is all puts, which is interesting. For a while there, we did see some players lurking in the calls. Not so much. Similar story out here for our other friend, SVXY, even though it has been, shall we say, annihilated from a vol perspective. In fact, it hit a 52-week low in terms of at-the-money vol this week. All the out there who were looking and have been writing in over the past couple of weeks saying how great it is to harvest premium in SVXY, particularly with the covered calls. Maybe not so much going forward here. But the Jan 2019 25 puts, still number one with the bullet out there. Probably a little bit, obviously, of a residual position from the sell-off that they apparently have not yet closed, which is a little bit intriguing nonetheless out there. So a lot of funky stuff cooking. Mr. Rose, anything else on your mind before we keep on rolling into some of our listeners' questions?
I have shared all I can think to share at this point. I'm still, and I'm on Martin Schreckel watch for us.
You're on Schreckel watch?
So,
what's
Shrilly or whatever?
Whatever. The pharma dude, pharma bro?
Yeah,
Why are you on pharma bro watch?
Okay, here I'm going to give you a pharma bro update, and then we'll get to VIX stuff again. He's in court. He broke into tears. He's begging for mercy. Everybody on Twitter's loving it, and we're waiting to find out where he lands between 18 months and 15 years. That's it.
Oh, he's going to get worked over just because he's such a pharma bro. Nobody likes the bro, Like, he really reminds me of a character.
His lawyer actually said at sentencing that sometimes he wants to punch him in the face.
His own lawyer?
Yeah.
Wow.
I say that about my best client at Cboe sometimes.
Oh, that's not nice, you jerk.
That means that you just always want to punch him in the face. And speaking of things we want to hear some
All right, let's
questions.
get back to work.
So let's keep rolling into our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, welcome to the Vol voicemail. This is, of course, a portion of the show where you guys ask us questions. Sometimes we ask you questions. I come into the show, we asked you a little flash poll coming in, kind of alluded to what we were talking about at the top of the show. A lot of your favorite vehicles for getting short some vol, like XIV, kind of off the board. SVXY, not really what it used to be. So what are you guys up to these days? How are you getting your short vol fix? We gave you guys 4 options. We said, you're pretty much straightforward. Your short VIX Futures, for those of you who like to play close to the fire or getting long some VIX puts or put spreads, short some VIX calls or call spreads, or short straight up, index S&P, SPY, SPX kind of vol. And as we are winding up the show here, 30% saying short VIX calls or call spreads leading the charge. 28% saying you're going straight to the source, getting short vol in the index itself. And then the rest of you tied getting short futures or long VIX puts, which I thought was kind of an interesting breakdown coming in to the show here. And, a lot of you guys are still on the SVXY handle. By the way, buddy there, Mr. Rhodes, Steve Sears, retweeting some stuff we were saying about RMC, and he added his comment saying Cboe is addressing the educational gap that defines VIX and volatility. Glad to see this forward movement, which will fill a major need in the market. The early February 5th Volnado, I like that, Volnado, was a structural issue related to a crazy construct of some VIX ETFs and ETNs. Vol as an asset remains intact. So there you go. Our buddy Steve Sears there, still preaching the gospel of vol as an asset class. He's doing your job for you there. Mr. Rhodes. Bixby, we mentioned this on the show yesterday on the option block, but I wanted to give you guys a chance to chime in too, because it's kind of an interesting question. We're getting a lot of this flavors of this question, which is effectively, do you think there will be an XIV2 anytime soon?
No.
We all know they have that in their power to create that. Mr. Meatball, you're giving a resounding no. Why is that?
I think that generally speaking, the Credit Suisse guys didn't like the product. They didn't want the product. They don't like it. We've seen them jerk around with we saw them when XIV wasn't having problems jerking around with issuance. They did the same thing with TVIX. They ended up with that small little portfolio that's loaded with risk in their eyes via their Lehman purchase. So my guess is that has gone the way of the dodo. We never see XIV again. And if Credit Suisse could figure out a way out of TVIX, they would figure out a way out of that too. They hate it. So I don't think that we'll ever see XIV again. Will we see something like a clone, like an SVXY or something like that, come out from some other fund shop? Probably. It was wildly successful. I don't see why somebody wouldn't try and do that, but maybe change the language a little bit to allow them to essentially not track their index. Then something like that could work. So I don't know. It certainly is interesting, but XIV is not coming back. It ain't, to quote Rick Pitino, XIV ain't walking through that door.
It's funny. Certainly, environment-wise, it is not an environment to launch a new inverse vol product right now. I can't imagine anyone's rushing to do that. But you're right. It does. I have heard talking to a lot of other people at the conference this week that Credit Suisse perhaps not the biggest fan of what was effectively their own product. Mr. Rhodes, do you agree with that? Or you think we're going to see XIV2 next week?
Not next week, but it's very possible that other structured or other exchange traded product companies might try to structure things something like this. The thing is, I think the approval process might be a little bit more difficult than it was in the past.
Yeah. Yes. Getting one of these through the regulators.
Yeah. So that's where I wonder if we, if maybe that's why we don't see him anytime in the near future.
Yeah, I think environment-wise that is certainly a big challenge. We got a bunch, everyone piling in on SVXY. Don't have time to get to all of those and some strategy stuff. Here's your buddy, Mr. Brandt, Mark, writing in saying this must have come in obviously before SVXY got hammered last week because he said SVXY was nuked and survived, so it is ideal for callers. Maybe not so much now. He also mentions Mille Grazie, must be Italian, to Sebastian for sharing his VXX backspreads. They are ideal for these sharps moves, and I hadn't learned them yet. Backspreads are fantastic. So there we go. People always writing in saying they learn good stuff on vol views. We are happy to oblige. Now we got to keep on rolling, though. It's time for us to embarrass ourselves horribly. Actually, someone pulled me aside this week, Russell, and said that his crystal ball is far and away his favorite segment because he loves to hear us embarrass ourselves, which is always fun. We're happy to oblige you. So let's get to it with a little bit of the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
Mark, I'm on some Wi-Fi here, so I'm a little bit delayed. So why don't you give us, where is VIX Cash on your screen right now, Mark?
1525.
All right, so I'm guessing that's a long way around of saying your 28 did not come to pass this week.
No.
We did not see the systematic shock. I guess we were good on my 1775 for a while until today's Meltapalooza came along and decided to move us 2 handles away. So yeah, I guess technically I win over 2 handles. I'm not gonna parade it around, but c'est la vie. I'll take it. But you know what, Mr. Rhodes, you haven't had a chance to be on in a while, so I will be charitable. Usually I like to go first because it gives me a nice area to stake my claim. But this week I'll be charitable. Mr. Rhodes, what are you feeling next week from a vol perspective?
Well, I'm going to say 7.
7.
And that's in honor of Farmer Bro just being convicted and sentenced to 7 years in prison.
Oh, Farmer Bro gets 7 years in jail.
And that is going to be one hell of a volatile 7 years for that guy.
Oh yeah, he's going to be.
I just have a funny feeling he got beat up a lot when he was a kid.
Oh my gosh, that guy
I'll get back on topic. So,
they're gonna.
I'm gonna say 14. I think the bleeding's going to continue a little bit. We don't really have any potential negative catalysts in the near term, so I think we're going to keep working our way lower.
You know, I was liking the 14 levels. This is why I like to go first, because then I get to stick out my claim. But you said Rhodes is 14, double his Farmer Bro level. Now we know how Mr. Rhodes' analysis works. He looks at criminal convictions, and then he just some multiplier therein. That's how he gets his VIX number. I was thinking around. I'm not quite as low as 14. I'm gonna go 3 handles below where I am right now. I'm gonna say 1475 this time next week. Mr. Meatball, what do you want to do? You want to go on the outliers? You want to somehow carve in the middle there?
No. So I gotta say, Russell, I'm with you on the Pharma Bro, man. They used that. Pharma Bro is gonna be like, they're gonna trade him like currency in prison. It should be pretty funny.
He does not look very physically intimidating at all.
No, but we'll see what kind of prison they send him to. I doubt it's a maximum security.
Yeah, I guess if he got beat up before, he might want to get used to that again, because I can't imagine he's gonna get beat.
So you know, I'm gonna go even lower than Russell. All right, I'm gonna say 13, 15.
Wow, a 15 handle swing from your crystal ball pick from 1 week to the next. So that's quite a.
You were 28 last week.
I was betting against my book. So, so at least I'd have something happy to talk about on Friday, if I was right.
He was playing the role of Russell on the show last week, which was the diehard VIX bull. So there we go, a nice little range, 1475 for me down to 14. Ironically, I'm the highest this week. That doesn't usually happen. And then Mr. Meatball on the downside, a 15 handle swing for those of you tracking the Meatball at home. And that's going to do it for this episode of Volatility Views live from the Cboe Risk Management Conference. See the hoops we jumped through, listeners, to get you guys the show. I hope you guys appreciate it. I know, just talking to you guys this week, I know a lot of you do. So we're happy you guys listen and we're happy to keep doing the show for you. But before we go, let's go back around the horn one last time. See what everybody's cooking up. We know what you're cooking up, Mr. Meatball. You got the new Vol Fund, so how are things going there? And if listeners want to learn more, where should they go?
Yeah, we're really excited to finally have launched with our first trade. You gotta email me, Mark@Carmenline Capital, and if you're looking for a smarter way to trade the S&P 500 with a smart built-in just-in-time hedge, then you should check us out. I think you'll be very pleased.
AIT. I like it. Just-in-time hedging. Interesting. All right. And Mr. Rhodes, aside from taking a break and napping for a week, what else you got on the horizon, sir?
Oh, what's the most exotic place that I have called in from?
Kamloops.
You used to like Kamloops. Hell yeah. Returning to Kamloops next Friday to
nice
cryptocurrencies on this trip.
I can't wait.
I'm doing Seattle, Victoria. I'm going from Seattle to Victoria on a seaplane, and then taking a ferry from Victoria to Vancouver. And all of these sessions, with one exception, are actually cryptocurrency oriented, as opposed to being VIX oriented. I've kind of taken on a slightly different role as far as products go at Cboe. Still paying attention to VIX, but people love to hear about them cryptos.
I was surprised last time when you found VIX traders in the heart of Kamloops, which is a giant forest, essentially, with listeners in the middle of British Columbia. Now you've trumped me even further by finding crypto traders in the middle of that. So if there is an aggregation of liquidity to be found, Mr. Rhodes will find it. In the meantime, check out all of his interviews and, of course, his blogs from the conference. You know where to find them, cboe.com. And on behalf of Mr. Rhodes and the Meatball and indeed myself, I thank all of you out there for listening. And, of course, for all of you who approached us at the conference this week, we love to talk to you guys. Keep that feedback coming. We love to hear from you. If you're not done, you want to hear a little bit more vol talk and skew and everything else, and come back. If you're listening live, come back in about half an hour. I'll be talking with all good stuff about commodity volatility, so stay tuned for that on TWIFO. Otherwise, we'll see you next week for more Volatility Views.
Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.